Wayne Heili, the Managing Director and CEO of Peninsula Energy. Peninsula Energy is a company that is moving towards production of uranium at its in-situ recovery facility in the state of Wyoming, the Lance projects. We're only months away from getting restarted. We have an exciting story, fully funded, advancing construction and activities in a daily basis. You can see huge visual improvements in the site and the preparedness. So we'll want to talk about that, the uranium markets, and share with you, some insight about the World Nuclear Association meeting here in London.
Good intro. I like that. And welcome to London to you, sir.
Thank you.
Very good. Now, we will talk about, you are advancing, and I think you are saying you're going to get in production by the end of this year.
That's right.
Right. We'll talk about that in a sec. So let's start with the World Nuclear Association conference, which you're attending today. It's packed. A lot of people here. I'm hearing 750 plus people signed up for this thing, and I've been downstairs, and it's pretty lively. What are you here for, and what do you want to get out of it?
Well, this is an annual opportunity for producers to meet up with consumers, if you will, but the utility community. We come to London because more of the European utility community comes to this conference than to the conferences in North America. So this in particular is an opportunity for us to meet with our utility customers and potential customers here in Europe. So we're talking about their needs and our capability to supply uranium to them in the future. What that looks like, where we have alignment, and what the markets are looking like.
It surprises me a bit, worrying about chasing European customers. You got enough back home, and that's your backyard. So is that likely to sell into Europe, you think?
Yes. Not only likely, but we already have signed 2 contracts with European utilities. So even though we're a North American or U.S. production asset, the European utilities are very interested in production out of the free world.
Right. And does the U.S. government, I mean, you quite often been kind of come on and share knowledge about the North American market, but is the U.S. government viewing uranium as a critical element? And if so, isn't it more likely to want to demand that U.S. producers sell into the U.S. market?
Yes and no. I mean, it is viewed as a critical element for most purposes, but the U.S. government has not defined it as such formally. It doesn't hit the critical minerals list.
Wow,
yeah, it should. There's no doubt about that, but it's all in the definitions of minerals for the critical minerals list. It's a caveat that they've excluded energy or fuel minerals, which, with the intention of excluding oil, gas, coal. Some have interpreted it as also including uranium, which is a fuel mineral.
Right.
So the caveat is everybody knows that uranium is critical. Yet it doesn't make the critical minerals list in the United States. That said, we're a free market participant, and how we and where we sell our market, our product is really up to the company.
Right. Well, industry seems to be working this out. If the governments aren't, hence the kind of packed venue here. If you look back 2-3 years, it's definitely more than that. Mm-hmm. And what are the kind of thematics that are being talked about here? We've seen a few kind of sessions at the beginning of the week on the demand supply side of things. Again, very, very well attended. People trying to understand, how much demand's coming down the line, and quite frankly, where is the supply coming from? Because not too many people talking again of getting into production at the moment, restart or otherwise, right?
Mm-hmm.
So what are you hearing?
So the demand is obviously ramping up. The world has an ambition to triple nuclear power by 2050. Where the supply comes from, the world needs more mines. It's absolutely imperative that we ramp up production. So every project, every company that's capable of ramping up has a place in this market right now.
Right.
It's not hard for us to write new contracts. What's necessary for us is to find contracts that add real value for us into the future. So we continue to look at the market, look ahead to the market, and say, at what point do we want to enter the market again and add more contracts? Today we have a nice contract portfolio. We're working with a number of customers who are going to take 40 to 50% of our future production in the next 10 years. We're not in a hurry to, as a company, commit more to the market, especially in fixed price mechanisms.
Yeah.
As we see, the upside in the market is tremendous.
Right, and that's 40% of current proposed production, not any blue sky exploration stuff. Is that right? Is that how it works?
Yeah, we have a 10-year plan of production that's out, and in the next 10 years, about 40% of that's committed.
Okay.
And our contracts run over the course of those 10 years. So what I'm saying is, in the next 10 years, what we expect to produce from the Lance projects versus what we have contracted is about 40%.
Okay, understood. And just sticking with the macro, just for a little bit long, if you don't mind, there really is a case of there's a lot being built. You name it. I think Russia announced another 34 builds, China another 11 builds on top of what they're doing, all across Europe. Reactor builds, SMRs now in the conversation, microreactors in the conversation. It's a case of, build it and they shall come. I mean, I find that kind of so strange in the sense that, okay, we know it works. It's a baseload energy. It's cheap, it's green, and all of those kind of good arguments that we would want to put out there.
Absolutely.
But not too much attention on the supply side, because explorers are not getting funded. Developers are finding it expensive to fund the advancement of their projects. And obviously, producers are talking the game of being incentivized to do more. So big disconnect throughout the market, it feels.
Yeah, the incentivization is not really coming from government sources. The producers, the government right now in the United States, where we've banned future imports of Russian material, is got a clear and purposeful focus on conversion and enrichment, more on the enrichment side. So the funding from the government is being funneled towards enrichment. And then there's some priority to giving funding to enrichment projects that are enriching U.S. production. So we kind of have a secondary path towards incentivization. It's the if you build it, it will come model of if we build more enrichment, we'll enrich more U.S. production.
Right.
So the U.S. producers are and Peninsula is talking with enrichers about how we might supply LEU and Heili to the U.S. government,
right,
and in exchange for some funding incentives for the enrichers.
Right. Okay. There's so many aspects. Just sticking with the U308 side of things. First of all, you're obviously moving forward into production by the end of this year, and that's a subconscious choice. You needed to be seen to be moving things forward. There's a lot of people who aren't doing that. So I'm just wondering, in terms of the argument of what does first mover advantage give you in terms of your economics, your ability to negotiate better term pricing and whatever other bells and whistles you throw into that contract, versus people sitting back and waiting and going, I'm waiting for whatever, $150 uranium, whatever it is that they think.
That's a great question. For us, we know through our conversations with the utilities that they will put a few contracts in place with developers, but their priority is to do contracts with established producers.
Right.
I can't wait to be back in that category, to be placed as an established producer. You get better contracts, you have better contract terms when you're an established producer. You'll extend contracts that you have. You become a reliable supplier into a consumer, and they want to maintain that relationship. So a lot of people say, well, okay, now you have contracts that go out to the year 2033. What happens after that? The assumption is we will extend those contracts. We'll define the terms, maybe redefine the terms for future deliveries and more favorably to us as an established producer. So getting yourself in the camp of an established and reliable supplier gives you a tremendous opportunity in the market to have better terms in your contracts. In terms, it's more than just price.
Right.
Yeah.
So when does this change from being a buyer's market to a seller's market in the context of enrichment? Okay, because if there's not a lot of U3O8 out there, there doesn't seem to be, certainly not in terms of the delta between what's being produced now, which is a declining curve, versus what the expectation around demand will be, which is a rapidly increasing curve. You can sell to enrichers, or so how does it work? Do you sell to them? Do they just process for you? Who owns it across that chain?
Well, in the chain, in the normal scheme of things, the utilities work with producers and purchase yellow cake. The utilities work with converters and purchase conversion, and the utilities work with enrichers and purchase enrichment. So our participation as a producer is really just getting the product to the market for the utility. And I don't normally...
Can that change?
Yeah, it is changing with the U.S. government programs where the incentives are for the enrichers to enhance their enrichment capacity.
Yep.
And the U.S. government is saying, we'll fund this, and we're going to give a priority to the enrichers who are going to be enriching U.S. material.
Sure.
So the market has shifted a little bit in that, we're talking to enrichers who will purchase their own uranium and conversion as a part of a program to supply to the U.S. government some reserve fuel.
So it's not quite subsidized, but it's maybe prepay in a way for the U.S. government. Can you capture any of that upside as a producer?
Absolutely.
You can.
Yeah, I mean, this is an expanding market for us now, that the U.S. government and I think other governments are looking at nuclear fuel reserves, making sure that they have extra capacity to help the utility communities when there's a crisis.
Right.
When there's a disruption in the fuel supply, the government might have a reserve on hand that they can shift in and substitute. So I think that's the purpose of the government programs now. They're asking how we can help. So if we incentivize the investment in new enrichment, how can we help build the entire nuclear fuel cycle in the United States? And start with enrichment, and then the enrichers are talking with the converters and the producers.
Right. And as a very near-term producer, I guess you're in the room.
Absolutely.
Right, because you actually be producing, not talking about the theory of producing, but you'll be producing. And in terms of kind of, I guess, steering those conversations, influencing those conversations around, well, what can you, and I can see what the government's doing for the enrichers, what can you do for us? Because I'm hoping to go to Wyoming, to the road trip, and we'll hopefully see you there at the end of October. I can. There's a lot of small companies, let me put it that way, who perhaps will find it difficult to kind of get to the end product, which is, well, literally production. Would the government consider getting involved, or is that too far back upstream for them to get involved in terms of, let's try and make a US-centric production capability to meet our needs? Because it seems to be heading that way.
It is, but it's a focus on the most critical need first. And
for sure.
For one reason or another, uranium is not perceived as the most critical piece of the fuel cycle. It said we need to build the fuel cycle in the United States. Enrichment is the biggest constraint, followed by conversion, and then we'll get to uranium. So
right?
Our business plan isn't to rely on U.S. government handouts. Our business plan is to work with. It's already an open market. It's undersupplied. There's plenty of utility demand. There's plenty of new opportunities in the market. Again, finding a home for the uranium doesn't seem to be a problem.
No, but it is about margin, right? Because I think you've been hit by a few things. The uranium market, for starters, has been pleasant for many years. It's made a good recovery in the last sort of 2 years or so. You were hit by one of your partners perhaps withdrawing their services, shall we say, on the processing front. We won't go into that. But there's a lot of headwinds, which you as a CEO of a mining company probably has to deal with. But now it's kind of catch-up time in a way, right? You'll get into production, revenue flowing, and that'll hide a multitude of sins that have gone by. Do you know what I mean?
Yeah.
In the past. But you also then got to now get really, really commercial and eke out as much margin from every stage that you can, with every contract that you can, not just through drill bit and exploration showing scale, but in terms of the selling bit. So I know you're aware of that. I'm not telling you anything new. How do you do? What are the things that you're looking at?
We are looking at our expectations for price over time, our ability to produce. The excess material that we have, is it better placed in a contract where we know where it's going, or is it better to play the spot market?
Yeah.
So we continue to strike that balance today. Peninsula Energy is more favorably positioned towards a wait and see on contracting.
Yeah.
Again, because we have a comfortable book of contracts that support our operation today.
Yeah.
We don't have to be in a hurry to make more contracting decisions.
Right.
That's how we're playing that. We're watching the market. We think it has to absolutely continue to go upward over time. And we're more inclined to participate in market-based contracts, if anything, market-priced contracts.
Yeah.
Rather than a fixed.
Well, explain that to, I guess, newbies into this space, right? Because you've got spot price, which quite a bit of the time seems to lag term, and then sometimes it slingshots past it. You've got that kind of factor to work out and view of the market. Then you've got historical lessons like the Paladin. They said, we're not doing contracts, we're going to do spot because it's worth more. And then you have an incident like Fukushima, and oh boy, you're exposed. So it's hedging across the board. It makes sense, but it doesn't feel like you're getting all of the margin you possibly can. But it is risk mitigation.
Well, and as an executive of a company, we're responsible for mitigating risks. And I think consistently, Peninsula has viewed that we should have a significant portion, but not all of our production committed. And that portion should probably be defined by what's our break even. If we have contracts for a portion, say 50-60% of our production, and that pays for all of our production, then the balance of the production can be exposed to the market, and that's where your profit margins are. If the market's up, your profit margins are quite good. If the price is down, you're going to get the blame. You're going to break even because of your contract book.
Yeah.
You're not going to lose money. We need to keep this company healthy, not just tomorrow, but for the long term, because we have an asset that can be producing for 20 to 30 years.
Right. Okay. We better move on to that side of things. Now, you shared a video with us, and we'll kind of probably overlay it in this bit. Now, it's not a long video, but things are moving on the ground. I can see building works happen. So where are we?
Well, every day we have about 70 people coming to the site to construct our plant facility. Now we're expanding our plant capacity in that we're doubling the front end capacity, which is the ion exchange, where we capture uranium from wellfield solutions. So we're going from a 1 million pound a year to a 2 million pound a year plant. We've talked in the past about the incidents that have affected Peninsula and the loss of the service provider. We used to ship our resins to a third party when we were in production in the past, and they would process it to the final product, yellow cake. Today we're expanding our plant facility so that we have the end-to-end capacity to produce the finished product, the dry yellow cake. So those circuits are coming in and on the ground, and you'll see the video, hopefully, a tremendous amount of construction going on. We've been pouring foundations, slabs, setting equipment, putting the structure up. Yeah. In the last month, the month of August, there's been a tremendous visual. It went from a construction project focused on foundations to a construction project focused on setting equipment, putting the building up. And now we think we'll be done with concrete work and in the coming weeks. We have equipment on site. It's been put on the slabs as soon as the slabs are cured. The building's going up around it. Huge visual change in the construction, but it's beginning to feel very real that we can get to the end of the year and have this plant ready to be put into production. And that's the final step for us is to have the ability to produce that dry yellow cake. And once the plant is ready, we kick off.
Right. And what's that ramp up look like? What do you start with, and how quickly do you get to 1 million and beyond?
We'll have a very good first year if things go according to plans. 2025 will really define the first year of production. The ramp up looks like, by the end of the second quarter of 2025, we're delivering product into the market. I mean, it takes a while to run inventory into the circuits, to build inventory through the plant, get finished product out the door and to the point of sale. So, first half of the year, we're building inventory and getting the first dry product out to the market.
Right.
Second half of the year becomes a much more substantial ramp up. We think in 2025, we can produce between 700,000 and 900,000 pounds in our first year in a ramp up. And that's really strong. Yeah. But that's based on the preparation work that we're doing. The foundation is being laid today.
Right.
And I don't mean the plant foundation now. I'm talking about well fields. We have 2 well fields that have been in production in the past and are not fully depleted. We're going to start with, some production out of that. We're also building a brand new well field. Mine Unit 3 is the name, and it's going to have 3 big header houses in it. Header house number 11, which is the first one in Mine Unit 3, is 90% complete. We'll have the construction of Mine Unit 3 complete this month.
Right.
And we'll begin preconditioning the solutions so that when the plant is ready, we'll be able to direct uranium-rich solutions to the plant on day one when the plant is ready. So we're preparing ourselves for a very strong and robust production start.
And just remind me of the team's experience in building these things, because the CapEx wasn't crazy. It's more, the risk really was so technical. So talk about the team's experience.
Well, we have a tremendously experienced team, over 200 years of uranium production operations between us. Ralph Canode, who runs the project, has experience in the United States and in Kazakhstan in developing and putting together projects. Brian Pyle,
well, from the field perspective or the processing, which side?
He's been a geologist, but also just plant management,
right?
Operational management,
right? Well, that's the new bit here, and I think people want to understand that it's not going to fall over. We're not going to take a long time to kind of get it up. There'll be tweaks. There always is. And that's the ramp up, right?
We have a team that has done this in multiple locations in the United States, and around the world. This is not new to our team. And in fact, we've held our team together over the years. We were a producer. Most of the team that was there for the early stage of production in 2016 is still in place.
Right.
So we have very experienced staff and senior management who knows how to run things, knows how to build things.
Yeah.
Our engineering, our vice president of projects is overseeing the construction and doing a very nice job. We have a tremendous team, and that's one of our assets. That's one of the attributes of Peninsula that can't be overlooked. We're not trying to do something cold with an inexperienced team.
Okay, fine. And with regards to 2 million pound of capacity, do you think other projects in Wyoming will just build their own? Is that the way forward? You're not going to process anyone else's stuff.
Well, our plan is to use our capacity
for sure.
But
is it modular? Can you expand it?
Yes, absolutely.
Yeah. Right.
Today we're building it to 2 million pounds. We actually have a 3 million pound a year license.
Okay.
And the design of the building is such that we can just bolt in that 3 million pounds when we want to. We'll probably build a satellite facility either in the southern portion of the Lance projects or up in our new project, the Dagger project, which we added last year. Dagger is very interesting because it has twice the grade, and it can be economically very, very attractive to produce at Dagger. It's very close to Lance, but it's in a slightly different geological context, and,
Right.
and so the grade is improved.
Yeah.
We're excited about the project opportunities that we have for expansion.
But first things first.
First things first.
Get this thing in production. You've got to prove yourself in that sense, right?
You might not know this, but there's never been a U.S. ISR producer that's produced 2 million pounds a year ever.
I do know that, and I think that's kind of my view of the US is like lots of £500,000, £1 million projects.
Yeah.
It takes a lot to kind of ram that together to add up to a number which gets anywhere near solving the US problem.
It tends to be because we're dealing with a lot of assets that are 5, 6, 10 million pounds.
That's right.
What sets Lance apart is it's 58 million pounds of resources,
10 times
with an opportunity to expand it through additional exploration.
Right.
The exploration target on the Lance projects itself is between 100 and 160 million additional pounds. This, forward looking, has the potential to be a 200 million pound project.
Okay.
We're setting it up today to produce at 2 million pounds a year, but with 200 million pound potential, we could certainly produce at a much higher rate. This is a world-class asset.
Okay. It is. Right. Let me talk about, but you're going to, the model, you're going to have to, like I said, I think you're kind of do a little bit of backfilling in terms of credibility, maybe backfilling in terms of valuation a bit by just getting into production will do a lot for you. I think that should be a moment for you. Then, as I say, stick to your knitting and get that thing done. The upside, the exploration, etc. How do you finance that? If you're a producer, what does that look like on the exploration side of things?
Well, we expect that, by this time next year, we'll be in a position where we're free cash flow positive.
Okay.
With our production and the markets as they are presently, that's our projection, is that our production will sustain not just sustain, but fund, future exploration. So for us, exploration can become replacement drilling and maybe expansion drilling. But it can be self-funded through the production that we're...
Right. Because I think, do you feel that should, and I hope that does happen, but you've had to raise money at quite difficult moments.
Yes.
Just to get part here, of our history, to stay in the game, as I call it.
That's right.
You've had to raise money and a lot of money, and you've taken a lot of flack personally, you've taken a lot of flack as a company, and it's kind of hammered the valuation and stuff. We are quite close to the point where we're producing revenue, quite close relatively to a free cash flow position, and potentially being able to fund your own growth, exploration, and also and the real upside there in terms of going from 2 million to maybe more. That's pretty exciting.
Yes. Yeah. But that is look, we've had some challenges in the past. We've overcome them. We've had to work hard and, like you said, raise money in difficult times in the market. Not always priced where we'd like it to be. Yeah. And certainly where our existing shareholders would have liked it, but we got through that. We're now in the best position this company's been in a very long time, on the cusp of production, on the cusp of becoming a cash flow positive company. We have a very new complexion and a very new outlook.
Feels it. Yeah. It does feel it. And I have to say congratulations to you over the last year, having that sort of curveball thrown at you with, withdrawal of certain services, and having to say, well, actually, we've got the capability, we'll do it ourselves, we'll finance it, it'll be a bit ugly, but I guess it's where we want to be, and we're in control of that.
That's right.
So I think well done you. And
Thank you.
Appreciate you coming and seeing us.
Appreciate the opportunity. It's great to see you, and I'm looking forward to hosting you in Wyoming in October.
I'll be coming by horse. Giddy up. Yeah.